If you're watching this video, chances are you already know there's something special about this pattern. Maybe you've seen it on the charts. Maybe you've noticed how it gives a slight edge in the market. Because here's the thing. Whenever the market makes a strong move, creates a higher high after a pullback, or gives us a clean continuation in a trend, most of those big moves begin from these 4 candle patterns. These patterns quietly play a powerful role in turning the market and triggering strong momentum. Yet most traders barely talk about them. But today, we're going deep. By the end of this video, you'll not only understand these patterns, but you'll also know exactly how to spot them, when to trust them, and how they can transform your trading confidence. Let's get into it. Before we jump into the strategy, let's first understand how this pattern is formed, because it can appear in different variations on the chart. On the buy side, this pattern usually begins with a sell candle, followed by a buy candle, then another sell candle, and finally a strong buy candle. On the sell side, it's the opposite. It starts with a buy candle, then a sell, another buy, and finally a strong sell candle. Now let's break down the types of this pattern. Type 1. We have a sell candle, then a buy candle that engulfs the previous sell candle, then again a sell candle, and finally a buy candle that engulfs the third candle. Type 2. A sell candle, then a buy candle, followed by another sell candle, and then the next buy candle engulfs that third sell candle. Type 3, a sell candle, then a buy candle that engulfs it. Then the third candle once again engulfs the second candle. And finally, the fourth candle engulfs the third candle as well. So in simple terms, the key idea here is that the fourth candle must engulf the third candle. And ideally the first and second candles should not be very small. They should have a good body size so the structure is meaningful and not just noise. So now let's talk about where we actually take trades. Because remember, this pattern can show up anywhere. To explain this better, look at this example. Here you can see the pattern forming in 3 different places. 1. Deep pullback if. This pattern appears during a deep pullback. We avoid it. Why? Because in deep pullback zones, the win rate is usually much lower and the market is not always ready to continue the trend yet. 2. Middle of a strong trend. This second example is the most ideal scenario. The pattern forms right in the middle of a strong move. Momentum is clear, trend is clean, and the market is already moving in one direction. Here, this pattern gives a very high probability setup, and this is where we love to take trades. 3. After a shallow retracement. Now look at the third example. The pattern forms after just 2 small retracement candles. This is candle 1, candle 2, candle 3, and candle 4 triggering the move. This is also a very strong location, and in this case, taking a buy trade makes complete sense because the structure is still bullish and momentum remains intact. Now take a look at this example. Even though it's not a perfect formation, because at this point, price hasn't broken the previous higher high, we still consider this a valid setup. Why? Because we have internal structure supporting the move. We have strong rejection wicks, and we also have 2 consecutive bullish candle patterns confirming momentum. When these factors line up together, this pattern becomes a high probability setup. For trade execution, place your stop loss just below the pattern. Take partial profits at a 1:1 risk to reward, and set your final target at 1:2 or 1:3, or wherever your personal target or market structure suggests. Now let's go over a sell-side example. In this chart, the pattern appears in 2 places. Here, the market breaks the previous lower low and forms the pattern within a clean, strong momentum move. This is an ideal setup. Structure is bearish, momentum is clear, and the pattern is aligning perfectly with the trend. But now look at this second place. Yes, the pattern appears here too, but we avoid this setup. Why? Because it's just noise. There's no clear push, no momentum, and the market is moving sideways in a range. Whenever the market is choppy like this pattern loses reliability, so it's better to stay out and wait for a clean structure. Now take a look at this chart. The pattern is forming in 3 different places here. I want you to tell me in the comments which setup is valid and which one is invalid. And most importantly, why? Pause the video, analyze it, and drop your answer below. These are a few more examples. pause the video and study them yourself. And if you're planning to add this pattern into your trading strategy, make sure you stay connected to this channel, because we're just getting started. We'll be uploading many more powerful and lesser-known price action patterns very soon. So keep learning, keep observing, and stay tuned.